If you're in a bearish condition market, or you're just more cautious about the market overall, maybe it's also a little too toppy. One of the things you can do is actually trade diagonals, but how do you structure diagonals or set these things up in order to defend your portfolio or in order to defend your position? How do you protect that portfolio that's maybe mostly bullish when the market's starting to roll over? So in this video, that's what I'm going to share with you is some insight regarding diagonals. We're going to look at the S&P 500 or the SPX, and I'll show you how we might structure this portfolio specifically on doing diagonal spreads, because we're going to get a positive Vega against kind of our portfolio, therefore reducing some of the downside problems that we will have. Now, if you're brand new here, I'm Sasha, the options coach. I've been teaching people to trade options over the last 10 plus years. And we do a bunch of things from classes to courses to even one-on-one coaching. And one of the things we did here was we talked a little bit about a crash-proof trading, and we talked a bit about diagonals. We're going to do more calendar spreads here coming up in the future and diagonals, but feel free to send me a note and message if you've got questions about some of the classes that we do. Anyways, I want to show you a diagonal here on the S&P 500 here. We're going to go to a Friday, kind of Monday type thing. So we'll go 15 days out. And what I want to show you is if we pull up just a couple of strikes here and we go to right here, let's just close it up. We'll go 15 and the 18 day. I'm just going to set something up right here. We're going to buy I'm going to start with a calendar spread. That way you can see the construction. And what we're going to do then is rotate it into a diagonal. So right now, a calendar spread is one at the money that you're selling, or in a way, it could be at the money, could be out of the money, but it's the same strike. And then the one that you're buying a little further out in time. Now, this is looking for non-directional movement. However, if we switch to custom right here at the bottom, going from calendar to custom, and then what we can do is offset this strike by 1. And then we'll unlock the price. And what that does is give us a diagonal. So it gives us a slight move. So rather than doing, let's say, vertical spreads, what you're doing is you're creating a bullish construction or condition here for a diagonal. And with the diagonal, what's nice is you have a little bit of rotation, and you have this rotation that you can customize. So let's say I want more rotation or a little more bullish, I can rotate it a little bit further. So if the market's more sold off, let's say a bigger crash, I could get more aggressive if I wanted to. The other thing that I could do is I could be a little bit more defensive. So if I don't want as much rotation, I could rotate it a lot less. So this is really what's powerful about diagonals, is that you can go in and rotate the structure. And if it goes down and continues to kind of go down, one of the huge advantages to a diagonal is that you also have positive Vega. So as volatility, I want you to watch this P&L. As volatility continues to increase, you're actually gaining a little bit on the P&L. That diagonal puffs up and expands. So as we sell off, so as that market sells off, yes, we're losing some on price, but we're gaining some of it back. Therefore, it's kind of cushioning the blow. It's kind of like wearing a headgear when you're playing hockey. It cushions the blow. Yes, you'll probably get hit, but at least it cushions some of the blow to your head or noggin. And that's the same thing here, is that we go in, and even though we're bullish in the direction, and we can construct it a little more rotation, a little less rotation, but as it pulls back against us, what it allows us to do is to cushion the blow or cushion the problem on that downside. So really powerful here in this side with these diagonals, that you can create this rotation. One other thing I want to show you is that you could actually rotate for a bearish diagonal. And I know you might say, well, now it's bearish. Yeah, in theory, but look, I still got a lot of room here to the upside. So even if I do like a slight little rotation to the downside, now I'm cushioned off on that downside if we sell off, but I've still got some room to the upside. It's as long as I don't power higher or push to the moon kind of too quickly. So if I explode, doing this kind of in a market that's been down for quite a while is probably not the best bet, because if you get a serious pop, this could be an issue. But overall, if you're kind of slowly trending up, or you're near the highs, or you're slowly grinding down, this could be a nice way to cushion things off. And even if you move this a little further, let's say to 5,800, and then we'll move this to 57.90 right here. So what you'll see is now I've got a lot more room there, and to the downside, if it happens, if it sells off, this really can defend me quite a bit. So meaning I've got plenty of room here to the upside, a lot of wiggle room, The theta is also pretty strong and significant, very nice. And I've got a lot of power behind these types of trades as well. So anyways, I hope you find that helpful. Truly appreciate you sticking with me. If you've got questions about some of the classes that we've got, feel free to let me know. This is one of the things we kind of discussed in the crash proof trading class. So anyways, hope you got a lot out of this video, gave you some things to think about. Obviously, there's a lot more structure regarding, hey, how do you enter these trades, when to enter, what delta, how many days out, how to manage these trades as well. But that's a much deeper discussion. Anyways, thanks again and hope to see you soon.